Hello. Thank you all for joining us today. We will be doing our crush course, Healthy Finance for Small Wineries. We have the pleasure of being joined by Jeanette Tan. She is a consulting CFO and an expert in this field, so she will definitely be walking us through all of the kind of relevant information that you need to know. And we will have a opportunity at the end for you to ask some specific questions to her. So if you would like, at the bottom of your Zoom screen, there is a chat button. You can enter those questions into the chat there. Myself and Adrienne will be kind of fielding those questions at the end for her. And yeah, we're very excited to have you all here. I don't want to waste any time. So Jeanette, if you'd like to just jump right in.
How about one of those polls that we put together? Is this a good time to
Oh,
that while
yeah.
we're waiting for people to settle in?
How do we see that? Do you know, Adrian? Oh, here we go. Polls, quizzes.
Yeah, we'd love to know,
Launch.
you know, what QuickBooks program, what accounting program you're using, what your role is. And yeah.
I'm
And Melissa,
wondering.
how are people doing? Are they still coming in the door?
Yeah, I'm wondering. I've never done a poll before. I did it started. Oh, it looks like people are starting to answer. Okay. I just wanted to make sure that they were seeing it. Thank you for reminding me. I completely forgot about the poll. But this will help us kind of know what the majority of you all are using. And your roles at the wineries.
Okay.
Is there a way you think, Adrian, that I can share the poll with Jeanette, or does she need
Oh,
to
I already
open?
saw it.
Oh, you saw it. Okay.
Yeah, it popped up.
Okay, cool.
Okay, well, if it looks like folks are settled, I can get started.
Yeah.
Okay, great. Fabulous. Well, welcome everyone, and thank you, Team Vino Shipper, for inviting me today. My name is Jeanette Tan, and this session is called Healthy Finance for Small Wineries. We're going to dive into the key financial issues every small winery owner needs to understand. And the reality is, in today's climate, only the strongest and best managed wineries will survive. If you own a winery producing under 110,000 cases, you are in exactly the right place. And if you also wear the hat of the reluctant bookkeeper, I invite you to set that hat aside and put on your owner hat. This session isn't about how to click through QuickBooks. It's about the financial issues you, as the owner, need to grasp in order to steer your business wisely and sustainably. Because here's the truth: without financial clarity, even the best wine can't save your winery. So I'm a consulting CFO for family wineries and an advanced certified QuickBooks Pro advisor. I work with a handful of clients one-on-one, but I also work with many more in our Silver Club Winery Management membership program. In addition, I've created on-demand courses for the wine industry. Our flagship course is the Fundamental Five. Now, my background isn't just accounting. I ran my family's French restaurant for 10 years and even worked as a cellar rat for an entire crush season. I was also part of the team that opened the Four Seasons Resort on Maui. Because of that, I understand the hospitality side of running a winery business, not just the spreadsheets. So, like many of you, I've been in the trenches, juggling the day-to-day together with running a business. Now, here's what we're going to cover. We'll look at the key financial issues for small wineries producing under 10,000 cases. These are the topics that regularly come up in my discussions with owners. For each topic, I'll highlight the three most important things to pay attention to so that you have a better chance of surviving in today's climate. It's going to feel a little bit like drinking from a fire hose, but don't worry, you'll have a handout so you can identify any issues you want to explore further. And of course, we'll leave plenty of time at the end, about 15 minutes, for Q&A. So as we go through, jot down any questions that come up or pop them in the chat. So at first glance, a winery is a winery, but size changes everything. Out of the 11,500 wineries in the US, only about 3% produce more than 50,000 cases. Yet those 3% account for nearly 90% of all the wine sold. Meanwhile, close to 9,000 wineries produce fewer than 5,000 cases each, and together they make up just 4% of sales, less than half of what a single medium-sized winery might sell on its own. That imbalance means large wineries control most of the resources, from negotiating power on materials to what gets printed in industry publications. So when you read an article that talks about the wine industry, it usually reflects the large winery world, not the small one you live in. And here's the key. A small winery isn't just a big winery in a smaller bottle. It's its own vintage. And that means you need your own strategies. So large wineries are designed for efficiency. They run high volume, industrial processes where consistency and output matter most. Small wineries, on the other hand, focus on craft. Every lot gets personal attention. Every vintage reflects individual decisions. That shows up in flexibility and perception of quality. Ironically, large wineries try to emulate and imply in their marketing that they too are a small winery. Unfortunately, the large wineries' marketing is so good, the consumers often cannot tell the difference. However, a bigger problem for the small wineries is that their craft production process causes a significantly higher cost to make the wine and to buy the grapes, glass, and other materials. Large wineries chase efficiency, small wineries chase expression. Another big difference is financial resources. Large wineries have an army of accounting professionals, in-house CFOs, accountants, compliance officers, and specialists for nearly everything. Small wineries, often it's the office manager doing the bookkeeping and 100 other things. Other times it's the owner juggling QuickBooks late at night. That's why small wineries need systems that are simpler, more efficient, and owner-driven. And that's exactly why I created the Fundamental 5 program, to give small wineries a clean, reliable bookkeeping framework without needing an accounting department. Big wineries have departments, but small wineries have determination. Now, large wineries live and die by distribution. They move pallets of wine through wholesale networks where volume is everything. Small wineries, though, succeed by selling direct to consumer and developing personal relationships in tasting rooms, wine clubs, events, and more. That requires storytelling, connecting with customers, and building loyalty. It's a completely different type of sales effort. Big wineries move pallets, small wineries move people. So when you compare small wineries to the giants, the differences couldn't be clearer. Large wineries run on high volume efficiency, while small wineries focus on craft and hands-on expression. Big players have entire teams of accountants, but most small wineries are managing with just part-time help. And while distribution is the lifeblood of large wineries, small wineries thrive through direct consumer sales. The truth is, you don't succeed by acting like a large winery. Small wineries succeed not by being smaller, but by being smarter. Small wineries must embrace this difference, not copy large winery playbooks. Your size is your strength if you align strategy with reality. Now, too often, the bookkeeping at a small winery gets left on autopilot. Bookkeepers enter data the way they see fit. And while the reports may be technically accurate, they don't give you, the owner, the insights you actually need. Financial management is not set it and forget it. You, as the owner, have to actively guide the process, or else those reports won't help you make better decisions. Remember, running on autopilot is like leaving wine to ferment without checking it. You probably won't like the results. Now, the first step in a good financial management process is entering transactions regularly and reconciling the bank accounts promptly, not months later, and certainly not crammed in at year end, or worse, just before the filing deadline. That way, you can review your financials at least quarterly, if not more often. I'm going to show you the reports in a typical financial packet and explain what information you can find in those reports. So we're looking at the profit and loss report. This shows income, expenses, and net profit. Now, this is the collapsed version. Owners love this one-page report because they can easily scan it. I also create a detailed version with all the sub-accounts, but I don't have the space here to show that to you. Now, the accounts receivable aging report tells you who owes you money and how long it's been outstanding. Staying on top of this keeps cash flow moving and prevents invoices from becoming stale and uncollectible. Now, the accounts payable aging report shows you what you owe to vendors. Monitoring this closely helps you manage cash needs and avoid the stress of unexpected bills. Don't allow your bookkeeper to only enter bills when you're ready to pay them. You need to know the whole picture. Now, inventory is your largest asset. This is another standard report in QuickBooks. When sales transactions are entered correctly, this report shows the quantity on hand and the cost of each SKU, giving you a clear picture of how much wine you're sitting on. Now, the gross profit by channel report is one of the most useful reports for winery owners because it shows the gross profit contribution from each sales channel: tasting room, club, wholesale, events, and more. Now, here's the key. Gross profit, not top line revenue, is what matters. Too many owners focus on revenue totals, but revenue without profit doesn't pay the bills. Now, the sales by SKU by channel report is another standard report in QuickBooks. This report takes you one level deeper, showing the gross margin by SKU for a given channel. It confirms whether your selling price is high enough. And then we have the balance sheet, which shows your assets, liabilities, and equity at a point in time. I find it most useful when compared to a prior period because that shows your trends, not just static numbers. Now, another step in the financial management process is tracking KPIs, or key performance indicators. These are your leading indicators, the things that drive results before they show up on the bottom line. For small wineries, some typical KPIs are visitor counts, club signups, club conversion rate, average case sale price, and many more. Don't just track totals, drive into the drivers. Then use those metrics to adjust marketing, fine-tune your sales mix, or rebalance production. In winemaking, if you don't track the varietal, you can't improve the blend. In finance, if you don't track KPIs, you can't improve your results. Now, every year you need a revenue forecast and an expense budget. This budget is your trellis. It gives structure so the vines can grow in the right direction. Without a trellis, the vine sprawls everywhere, wasting energy and becoming unmanageable. Without a budget, your winery spending and production can sprawl in the same way. A forecast and budget align revenue, staffing, and production with reality, so you're not caught off guard. And if the plan doesn't work on paper, it won't work in real life. That's why this step is essential for a financially healthy winery. So financial management isn't about becoming a bookkeeper. It's about staying in control. When your books are current and you review them regularly, you always have a clear picture of where you stand. Tracking key metrics like number of visitors helps you fine-tune your decisions instead of flying blind. And when you create a forecast and budget, you're building a trellis that guides your growth in the right direction. That's how you lead with confidence, because financial management is your winemaking plan. Ignore it and you're just left hoping for a good vintage. Now, cash flow management is part of the financial management process, but it's such a critical step that it gets its own discussion. So cash flow and profit are not the same thing. You can show a profit on paper and still not have enough cash in the bank to pay your team, your vendors, or yourself. Cash flow is what keeps your winery alive day to day. For every business, it can be the difference between surviving and shutting down. But for small wineries, the cash flow fluctuations are extreme. Relative to your revenue, the fluctuation is greater than for large wineries. Think of it this way: cash flow is the wine in your glass. Profit is still aging in the cellar. When you're producing wine, cash goes out long before revenue comes in. Grapes, barrels, bottling. The costs hit up front. Then that wine sits in bulk or in bottles for months, sometimes even years before it's sold. Your largest asset is also your biggest cash drain. And poor planning, especially overproduction, just makes the problem worse. Inventory is often where cash goes to disappear until release. Now, another challenge is seasonality. Expenses spike at harvest and bottling. Revenues, on the other hand, spike during club shipments and tasting room events. Harvest bills and holiday sales rarely arrive at the same time, and that mismatch makes cash flow management harder. The timing never lines up neatly. Larger wineries can buffer this with reserves, but small wineries feel every shift in the tide. Now, the only way to get ahead of these mismatches is with a cash flow forecast. But to make the cash flow forecast, you need an annual revenue forecast and expense budget. The cash flow forecast lets you anticipate shortages before they happen. With a plan in place, you can use your credit or savings strategically, not in a panic. Or you can request an increase in your line of credit from your bank. These requests take several months to get approved. If you're proactive and ask before you need the funds, you are more likely to get it. But if you ask at the last minute when you suddenly realize you don't have the cash to make payroll, that is a guarantee that you'll be denied. A cash flow forecast is your irrigation plan. Without it, the vines will suffer. So cash flow is the lifeblood of your winery, and it can slip away faster than you think. Your bulk and case goods inventory represents money tied up, often for months or years before it turns back into cash. Expenses hit hardest during harvest and bottling, while revenue peaks at club shipments and holidays, and the timing never matches up. The only way to avoid running dry is to forecast your cash flow so you can see shortages coming and prevent panic borrowing. And yes, this means that you first need to make the revenue forecast and expense budget. At the end of the day, cash flow forecasting isn't optional. It's survival. Now, how to price for profitability is one of the most common questions winery owners ask me. Years ago, when I was working at the Four Seasons, I had an assignment for a finance course where I had to interview 3 businesses about how they set their prices. I asked the food and beverage director how the resort set theirs. His answer: we charge as much as we can get away with. And really, that's what pricing comes down to. Price too low, and customers assume it's plunk. Price too high, and they walk away. Pricing is both art and science. And for small wineries, there are 3 keys to getting it right. To start, you have to know your break-even point, which is how many cases you need to sell at what price to cover all your costs. That means all costs, overhead, loan payments, and yes, even a reasonable profit for yourself. Your break-even sets the floor price you should never dip below. If you don't know your break-even, you're guessing, not managing. Second, revisit your sales mix. This is where small wineries can make the biggest difference in their net profit. Each channel has a different margin. Direct sales to restaurants are typically 30% below retail, and distribution only 50% of retail. That means you don't have to make more wine to make more profit. You just need to shift to your DTC channels, tasting room, wine club, events, or make up some new ones. Your retail price is probably already at the sweet spot between value and profitability. So instead of focusing on pricing, focus on how to increase DTC sales. You don't need to make more wine. You just need to sell it smarter. And finally, you must know your true cost. True cost includes these cost components: grapes, winemaking overhead, and packaging. Now, your aged wines will also have a barrel cost component. Each SKU has a different amount of these components so that a rosé will have less winemaking overhead than a long-aged Cabernet. To make things more complicated, true cost is not the same thing as tax cost, which is calculated by your tax preparer. If you base your price on tax cost, you will almost always underprice your wines. True cost ensures that your prices are sustainable. So pricing isn't guesswork, it's strategy. You need to know your break-even point so you never sell below the cost of staying in business. You also need to pay attention to your sales mix because shifting more wine to DTC channels can double your profit without increasing production. And none of this works if you don't know your true cost. Put these pieces together because break even plus sales mix plus true cost equals your pricing sweet spot. And once again, this is where our fundamental 5 comes in. It's the system that ensures your numbers are clean and reliable, so your break-even calculations and true costs aren't guesswork, but real tools to help you price with confidence. Now, costing is one of the most misunderstood parts of winery finances. There's a lot of hearsay and a lot of big winery practices that simply don't apply to small wineries. As I mentioned before, calculating true cost is complicated, but those steps often get confused and mixed up with tax cost. If you don't know the difference, you could be making a fatal error. Now, both methods, true cost and tax costs, include the same ingredients: grapes, labor, materials, and overhead. But the rules for how those costs are handled are completely different, which means the results are completely different. Think of it this way: tax costs and true cost use the same ingredients, but the recipe changes the outcome. The recipe for true cost was written by a board of accountants and is based on accounting standards so that the costs are consistent. It gives you the full picture of the cost of each SKU. True cost is what you need for internal decision making. It's the number you need to run your business. The recipe for tax cost is in the tax code. This was written by Congress, so the rules are illogical and inconsistent from year to year. The rules also fluctuate depending on your revenue. So the rules that apply to a large winery are not likely to be the same ones that apply to a small winery. Tax cost is for compliance. It's how the IRS determines how much income tax you owe. True cost is the number you need to run your business. That's why you need a tax preparer who understands both worlds. So, someone who can convert your book true cost into tax cost for your tax return. Many accountants who specialize in the wine industry only know large winery practices. Choose a tax preparer who understands small wineries. Ask your tax preparer to explain to you the difference between true cost and tax cost. You don't need to know the details. Just listen to the answer and decide how well they explained it, or if they said it wasn't an important distinction and not worth the fee they would charge to do it. How much are you willing to pay for the right information? Then how much are you willing to pay for the wrong information? It's easy to assume that cost is cost, but that mistake can be fatal. True cost and tax cost may use the same components, but they give you very different results. True cost is what you rely on in your internal financials to guide pricing and profitability decisions. Tax cost is what goes on your tax return to satisfy the IRS, nothing more. That's why you need a tax preparer who understands how to convert one to the other. Always remember, true cost runs your winery. Tax cost runs your tax return. And if you are low-key curious about the costing process, or if you are the reluctant bookkeeper who handles the costing process, we have courses on costing for both of you. Now, financing is one of the toughest issues for small wineries because the hard truth is that startup wineries have almost no access to financing unless the owner is already wealthy. But once your winery is established and your financials show a profit, new doors begin to open. However, lenders want proof of fiscal discipline and profitability before they're willing to invest in you. In wine, money flows to those who prove they can manage it. Now, most startups rely on their own capital or private investors to get off the ground because, unfortunately, there's no easy money for startups. If you don't already own land or have millions in equity, banks won't offer you financing. That means when you're starting up, it's important to set realistic expectations. So start small and finance your growth with your profits. Now, once your winery is up and running, traditional financing options do become available. These include SBA loans, banks that specialize in wineries, and equipment loans. But here's the catch. All of them require financial statements to show profit. Lenders don't buy your story, they buy your numbers. Now, when traditional financing isn't an option, you may need to think outside the barrel. Some winery owners have used credit cards, though, of course, that comes with risk and must be managed wisely. Crowdfunding can help build community support while raising needed cash. I love selling futures because it can bring cash in a full year before a release. And in rare cases, venture capital may be available for growth-focused wineries. But all of these alternatives depend on one thing: your profitability and your financial discipline. Credit cards, crowdfunding, and futures can fill gaps if managed wisely. So financing may feel out of reach, but there are options at every stage. Startups often have little access unless the owner already has land or wealth. But once your winery is established and profitable, SBA loans, bank financing, and equipment loans become real possibilities. And for adventurous folks, alternatives like credit cards, crowdfunding, or selling futures can provide the cash you need. The path to financing always comes back to fiscal discipline and clean financials, because financing doesn't create discipline, it rewards it. And as you already know, tax and compliance issues come with the territory. The reality is the requirements don't scale down just because you're a small winery. Large wineries have in-house compliance specialists, lawyers, and accountants. Small wineries, most of the time you're juggling these tasks yourself, often without specialized support. Small wineries play by the same rules as the big guys, just without the team to back them up. And this is how many winery owners feel trying to keep up with all the rules, completely overwhelmed. Small wineries face the same IRS, TTB, and state requirements as large wineries, but without a compliance department, all of the licensing, reporting, paying, and renewing falls on your plate. And again, the rules shift depending on your revenue. Thus, some rules are applied differently for a large winery than for a small winery. I've seen situations where a new hire from a large winery implemented procedures that were not required for the small winery. That's a lot to stay on top of, especially when you're already wearing multiple hats as an owner. Big wineries have specialists, but small wineries have multitaskers. Now, compliance happens on multiple levels, 49 different out-of-state states, all with different sales tax, excise tax, and shipping rules for direct shipping. Federal and state excise tax on both bulk and case goods, sales tax within your state. On top of that, federal label approvals. California has a grape crush report, and you have local property taxes. It seems that compliance never ends. From federal to local, compliance is a maze. And if you don't have a map, you'll waste time, take wrong turns, or hit dead ends. The penalties for noncompliance are steep. Missed or late filings can cost more than a spoiled barrel. So here are a few solutions. Hire a compliance specialist or use tools like VinoShipper. I've been a fan of VinoShipper for years because the service they provide the small winery is a lifeline. And they keep improving the program and adding more features. So I'm currently writing a mini course on how to use VinoShipper with our Fundamental 5 system. Other solutions are to assign a detail-oriented team member to monitor deadlines and bookmark the Wine Institute's direct shipping laws page to stay current. So small wineries face the same complex layers of compliance issues as the big players, just without the in-house teams of specialists. So the small wineries tend to either ignore it or become overwhelmed. Unfortunately, the risk of missed deadlines is steep penalties that eat into your bottom line. So find and use tools that will eliminate the overwhelm and give you peace of mind. Protect your winery by staying on top of the rules, because good compliance doesn't make you money, but bad compliance will cost you plenty. Now, your financial reports are only as good as the records behind them. If the records are messy, the reports are useless. For small wineries, the margin for error is so small that you simply can't afford sloppy record keeping. Good records like good vineyard are like good vineyard notes. Without them, you're farming blind. First of all, timeliness matters. If you wait months to enter transactions, your reports won't give you useful insights. Old books are like old grapes. They don't make good wine. Stay current by entering transactions promptly and reviewing financials at least quarterly. Some reports should be reviewed monthly, Others, like the accounts receivable and accounts payable, should be reviewed weekly. When the numbers are fresh, you can make decisions with confidence. Now, it goes without saying that you need to keep your paper files organized so that you can find what you're looking for. But this rule also applies to your financial reports. An effective chart of accounts is how you keep the financial data organized so you can find what you're looking for. Now, the chart of accounts should be designed for a small winery and should not try to copy AMS. It should not have generic accounts like supplies or outside services because they hide the real drivers of your costs. When you ditch the miscellaneous bucket, your reports suddenly tell a story you can act on. Think of it this way. A miscellaneous bucket is like a mystery blend. You'll never know what's really in it. Since wine is your biggest asset, accuracy here is essential. Do regular inventory counts to confirm what's actually on hand, both bulk wine and case goods. This prevents costly surprises, whether from miscounts, misallocation, or sadly, even theft. If you don't count your wine, you can't count on your numbers. So your reports are only as good as the records behind them, and clean records are the foundation of every decision you make. When your bookkeeping is timely, you avoid surprises and always know where you stand. A chart of accounts designed for small winery keeps your costs organized so you can see exactly what drives profitability. And regular inventory counts protect your biggest asset and keep your numbers trustworthy. Put all of that together and you'll see why messy records turn your numbers into plonk, but clean records make them vintage quality. Of course, our Fundamental 5 program begins with discussing the chart of accounts because a good chart of accounts is the key to financials that are meaningful to the management team. When we started today, I said that without financial clarity, even the best wine can't save your winery. That's still the core truth. These three barrels, clarity, profit, and planning, are what keep your winery financially healthy. With clarity, you know what's really happening in your business. With profit, you can sustain operations and grow stronger, even in today's tough climate. And with planning, you can steer your winery with intention instead of reacting in crisis. I hope you discovered a few new terms and concepts that you will explore further so that you can lead with numbers you can trust. Financial health is just as important as vineyard health. And when your numbers are clear and accurate, you can lead your winery with confidence. So let's pause here and open it up for your questions. I'd love to hear from you. What challenges are you facing in your winery today? This is your time to bring up questions about QuickBooks, costing, financials, or anything else we've touched on. No question is too simple. If you're wondering about it, I guarantee someone else is too. So let's talk about the issues that matter most to you. Okay. So
So
listen, do you have
let me,
any?
yeah, I'm looking through. It says the chat is disabled. That's weird. I have it on. Okay, so let's see. Where would we find a good chart of accounts focused on the small micro winery?
Well, that is something that is part of our Fundamental 5 course. But very soon we're launching a free mini course on the chart of accounts, and you'll be able to see it there. So if you sign up for our newsletter, you'll get a notice when that free mini course is available.
Okay. Please describe main elements of tax cost.
Well, one of the main differences between tax cost and true cost is the timing of when you can expense the components. So there's basically three different revenue brackets, and the rules are different for each three. But for most of the wineries that are under $25 million, and I'm not a CPA, so I'm not quoting exact here. I'm just giving you some guidelines. Your winemaking overhead expenses can be written off the year that you spent the money. Whereas in true cost, your winemaking overhead is part of the cost of the wine. So you can see right off, and furthermore, if you have estate grapes and you farm the grapes, that farming cost can be written off the year that you did the farming, and it's not part of the cost of the wine. So you can see right off the bat, tax cost is always less than true cost. So that's why I say if you base your pricing on tax cost, you're going to be leaving a lot of money on the table. True cost is the only cost that gives you the complete picture of the cost of the wine. But the beauty is you can enter true cost in your books, and your tax preparer can easily convert true cost to tax cost. But if you put tax cost in your books, there's no way you can convert back to true cost.
All righty. How do we sign up for the newsletter is a question that we have here.
If you go to our website, which is www.qbwinerysolutions.com, down in the footer, there is gosh, I can't even remember the name of my newsletter. I think we call it The Crush or something like that. It's bottom left of the page.
All righty. So for red wines that need to be aged in the bottle for a year or more, where does that storage cost hit the P&L? In COGS or gross profit in operations?
Okay, so this is a distinction. This is a cost that only applies to the large wineries. For a small winery, once the wine goes into glass, the costing stops. So the cost to store that wine is an overhead expense. Um, because it's a marketing decision of when to release the wine. The wine technically could be released. You know, you're making a marketing decision about whether or not to hold on to it. But again, there's in the tax code, there's a distinction based on the size of the winery, whether or not that cost is included with the tax cost or not.
Okay. Would a break-even calculation or true cost calculation include business and or legal fees?
Oh, yeah, absolutely. So business fees and legal fees are part of your overhead. And so they would be part of a break even. They would not be part of your true cost. Your true cost would only include winemaking costs. So none of your sales and G&A type expenses are part of the winemaking cost. Winemaking would have some of the facility overhead, but not any of the sales and marketing overhead. And of course, winemaking has all of the salaries. Some of the winemaking overhead is the salaries of the production team and all the supplies that they're using.
I noticed many of your reports were broken out by SKU, but if we just have batch deposits coming in from our merchant services, do you suggest we then split that out by SKU?
Yes, and that is again a big distinction between the yeah, yes, absolutely. In our fundamental five system, um, uh, figuring out the best way of bringing the sales by SKU into QuickBooks is how you can then track the sales by SKU numbers, how you get the gross profit numbers. Without bringing that detail in, you can't get that information. Now, fortunately, and we have two different methods of bringing the numbers in. Vino Shipper happens to have excellent reports. And so we recommend a process called the month-end summary, where you run a report at the end of the month to bring that into QuickBooks. And then you match up those sales with the batch deposits that were made in the middle of the month. And again, because Vino Shipper's reports are so good, those reports match. This is not the case with all POS and e-commerce programs.
Thank you. Will the deck be made available? Yes, it will be. We will send that is in an email as well as with the recording of this. So yes, that is the answer to that. The next question is, does QuickBooks have the capability to help differentiate between tax cost versus true cost?
No, and no system can. Oh, I suppose, I mean, I can't speak for AMS or NetSuite. That's not my world, but no, in QuickBooks, you only enter true cost. However, because in the costing process, you have costing work papers. Even if you're using a program like Innovent, you still have a costing work paper. And from that work paper, the tax team can take the true cost numbers and convert them into tax cost.
Um, Alrighty. This next question, I'm not really sure if it's for you or for me. Do you have a sense of what point it is worth going with a company like Vino Shipper and fulfilling shipping orders in-house versus using a third party like Carton and Crates?
It's just, it's a money issue. You look at the total fees that you're paying to Vino Shipper and the total fees you'd be paying to the other, but you also need to factor in the people, like who's gonna be doing this. It takes a huge amount of human effort and brain cells to actually stay on top of the compliance. So it's not a straight dollars calculation because you got to factor in an extra person if you're going to use, if you're, once you move away from Vino Shipper.
Yeah. And I would also just like to say too, you also don't get customer service and insurance and all of those things built in when you use a company like Cartons and Crates. But so the next one is, do you itemize sales tax collected from sales? QuickBooks Online simply sends a bulk amount versus tax and items sold.
Yeah, and that's how QuickBooks Desktop works the same way. So the sales tax lands in one bucket. The amount of the amount of sales tax that you send to not only California, but to your local state is not the amount of tax that you collect. It's the amount of tax that is due based on your revenue. So hopefully the amount that you've collected matches what you calculate is due. So that is a huge misconception that simply because you collected it, that money is what you need to give back. Yeah, they better match, and you better not have collected more than what is due. But many times we find situations where you're not collecting enough. So then you got to go in and figure out, oh, what happened? Why didn't I collect enough tax for that?
Can you talk a little more about the courses you're working on for Vino Shipper? How are they different from what you offer on your website?
Well, the course for Vino Shipper will discuss which reports that you're going to pull from Vino Shipper and how you then get that information into QuickBooks. So it'll be a step by step. It'll be a specialized mini course on the monthly summary process. And then there's also some reconciliation involved with that as well.
Hmm. I was just reviewing the poll. It looks like the majority of the people use QuickBooks Online. A few people use QuickBooks PC and a couple use Mac. We only have one person that uses Wave and a few people use Excel. The vast majority of the people that joined us today are the owners.
Okay.
A lot of people say that their accountant or someone on their team handles their costing. And then for what other POS e-commerce programs they're receiving payments from, a lot of people chose other, and it didn't give me the option to put a specify in there. I'd be curious what the other is if anybody wants to pop that in the webinar.
Yeah, the fascinating thing that I see with the small wineries is because they can take payments from PayPal and Stripe and Square and their own e-commerce platform, they will. But that
Hmm.
actually just complicates life because now you have four different procedures that you need to track. So we strongly recommend you get onto just one platform where your sales are, where your DTC sales are rolling through. You record your distribution and your wholesale sales directly in QuickBooks, but your DCC sales, you want to consolidate that into just one platform. So you only have one procedure that you need to follow. It's just, yeah, it just simplifies things.
Yeah. I think a lot of people use multiple systems when they offer like food or something. We have a lot of wineries that have like restaurants or like delis. I've found a lot of producers use Toast in that
Mm.
situation because Toast is more for that restaurant kind of built out for restaurants, whereas Vino Shipper, I mean, we have the ability to do food, but it's a little different.
It's not, yeah, it's not as robust as Toast is.
Yeah.
Well, I actually have a winery that is turning on Toast, so I'm really eager to see what's behind the hood. Now, the good thing about programs that are designed for the restaurant system is the reports match. It's a fascinating thing. I don't know why so many winery programs have such a hard time making reports that match, where the money comes in, matches the detail of the sales. So I know that Toast can, you can get the reports that you need from Toast.
Okay. We don't have any other questions right now, which I'm a little surprised, but maybe some more will pop up. We got another one. Any accounting/reporting differences introduced with international sales?
Oof. I have a couple clients that sell internationally. Um, no, in those situations, the international sales are a separate class from distribution and wholesale. So you know what the international is, and you have yet another layer of compliance that you need to deal with for exports.
Right.
Yeah, I mean, I think it's a good scam. These folks, the folks who export, they take vacations in whatever country. And so they can write off their vacation as a sales trip. And so, yeah, it's a nice, hey, totally legal perk.
Yeah, that's kind of nice. Do you have a date set for your Vino Shipper QuickBooks mini course?
Sorry, I don't.
Yeah. We like to say on a Tuesday sometime.
Yeah, exactly. I have a little backlog of other courses that I'm working on.
Um, so you just got a nice compliment. Loved your spot on creative analogies, Jeanette. Well done. Thank you. I look forward to diving deeper into the Vino Shipper QuickBooks mini course.
Great.
Thank you, April. That was very nice of you. Yeah, I think this was really great. Super useful. I think the main thing to hammer home is looking at your books often and being very familiar with them, and definitely don't be afraid of them. What are typical ways of financing when opening a first tasting room?
Well, now, if you've been in business already, it is feasible to get financing for a tasting room because you have a logical reason for the money. And then you have to have, you'll need to have a pro forma to show what you expect the tasting room to bring in, which will then justify your payment terms for the loan. What you're not going to get money for is just simply running out of cash. So you can get loans for expansion and specific business purposes like that, in theory. But again, it's very tough to get to get financing in today's world.
That's where maybe that crowdfunding idea comes back into play too.
Yeah, no, it's fascinating. I mean, if you've developed a following, before opening the tasting room, then yeah, I would try the crowdfunding thing.
What version of QuickBooks do you recommend for small wineries? Like QuickBooks Plus, Enterprise, inventory add-on features? Like, is there one that you specifically like?
Well, okay. So first of all, I prefer QuickBooks Desktop. However, QuickBooks Online for a small winery does work. It doesn't work as well as QuickBooks Desktop, and they're actually two completely different programs. It's not that they took QuickBooks Desktop and put it in the cloud. Completely different programs, so the interface is different, how the reports work are different. But for a small winery, especially where the owner is doing the bookkeeping, the bank feed works really, really nicely, and that saves a giant amount of time. I don't usually recommend the bank feed because because you need to pay attention to the transactions that are getting booked. But if you're the owner and you're doing it, you're going to be booking them at the same time and you're going to be reviewing it at the same time. So fraudulent things aren't just going to slip through. Um, so QuickBooks Online is fine. You do have to get, it's the second most expensive version, the version that has classes, and budgets. I think yeah, it's not the most expensive version, but it's the next most expensive version. I apologize. They keep changing the names of the online version. Now for desktop, you don't need, if you're a small winery, you don't need enterprise. You just need QuickBooks Premier. And it will come with inventory will come in. Inventory module is already built into QuickBooks Desktop. It technically only has one inventory location, but frankly, managing multiple inventory locations in QuickBooks takes a full-time person, just managing all the transfers. So unless you're a larger winery with, over 15,000 case production and a team, there's no need to get enterprise and no need to get the inventory module because that's just extra work. We do have, even though there's only one location in regular QuickBooks, we do know that wine is stored in multiple places. So in our Fundamental 5 program, we explain how you do the inventory reconciliation by getting reports from all your different locations and then comparing that total with the total in QuickBooks. So our process works just as well and doesn't cost an arm and a leg and is easier to manage.
Great. If we are not tracking our costs by SKU at the moment, we don't even have SKUs assigned to our wines. What are the first steps we should take to build that system? We use Square, Vino Shipper, and QuickBooks Online. How much can they talk to each other? So that's kind of two parts if you want to start.
Okay, all right. So first of all, integrating systems is one of the most abused marketing phrases around. We integrate with QuickBooks. Just because a program integrates with QuickBooks doesn't mean that it integrates in a useful fashion. For example, just take Square. There are different apps that will integrate between Square and QuickBooks, and each one of them does it differently. So don't automatically assume that integration is going to solve your problem. So let's see. So you've got Vino Shipper, Square, and QB Online. Okay, now, but your main question was how do you get the costing going? Well, you start with your bottle reports. So you have to start documenting stuff. You need to know how much did you bottle? And then and even before you bottle, all right, well, let's backtrack. You have bulk wine and you have X number of barrels of various different things. You need to itemize all of your bulk wine by vintage and varietal and any other designations that you might have. If you have a vineyard designate, then you need to know that. So you have your barrel inventory by varietal and by vintage. Now, then when you go to bottle, that wine is likely, those barrels are likely to be blended. You have to have notes on any blending that you do. And then you have bulk wine that becomes case goods. You have packaging material that comes together into packaging material. So it's a process, but you have to have all this information in the right buckets to begin with. And so part of the process is starting to get the discipline of tracking your bulk wine inventory by, exactly how much do you have by varietal, by vintage, and any other designation that you need. You need to have blending reports. You need to have bottling reports. How much did I bottle of what? And then with those pieces of information, plus the expenses that you've tracked in QuickBooks, now all that information comes together in what's called the costing book. It's an Excel spreadsheet that if you're an Excel nerd, you will love the costing book. So that would be the third step, is to find an Excel nerd on your team. And our costing course will teach you how to pull all those numbers together.
And the second part, I'll kind of answer a little. So if you use Square for like your point of sale, Shipper and Square don't integrate, don't have a connection.
It's okay.
But I will mention, if in case you're unaware, that Shipper does have a built-in point of sale. I would do have to mention that. But QuickBooks and Vino Shipper, we have been working on building a connection there. I can't tell you that it will be out, on a specific date, but it is something that has been being worked on, which we're all very excited for. But I do not know when that will go live. Um, I would say, though, for Square and Vino Shipper, if you're, committed to using those two things, I think, Jeanette, what would you say? Get reporting from each and combine?
Well, my question is, what are you selling through Square that you could sell through Vino Shipper? Can you eliminate Square and just use Vino Shipper? Because I know Vino Shipper integrates with websites, right?
Yeah,
I've seen it integrate with people's websites.
yeah. I'm
So
thinking maybe they use it for a point of sale and maybe they use it for, I don't know. I
yeah,
can't.
yeah. So that's the trick, is to um, try to consolidate all these different programs.
Yeah.
And don't focus on whether a program integrates or not. Like, they're probably using Square because Square integrates with QuickBooks. But unless you're using the correct app to talk between Square and QuickBooks, it's not pulling the right details in, and it's just making a mess.
Right.
I prefer the manual method, which everyone is like, "Ugh, manual," not in today's day and age, but sometimes the manual method is faster than fussing with the integration thing and fussing with the bad information.
So they said they use Square for a point of sale because it's inexpensive and they print food tickets. That's one thing Vino Shipper does not do. So if you have a kitchen, we can't like talk back to the kitchen, to
Mhm.
run the food or whatever. So that is probably why.
So, and, right, so then are they selling full bottles of wine through Square or just glasses?
I don't know. I would assume though if they are selling full, it's probably, on-site consumption maybe.
Yeah, okay. Well, I mean, a lot depend, everyone, one of the fascinating things, one of the things I love about the wine industry is that everybody has a slightly different way that they do things. So, you'd want to look at their workflow and see what transactions are actually going through Square. And, if you're only selling glasses of wine and food and that's going through Square, and everything else can go through Vino Shipper, well, that's easy because glasses of wine don't hit inventory. That's a different process, tracking the costing for your wine by the glass programs.
Yeah, so they said they are selling all their on-site tastings and bottles in the tasting room through Square.
Okay, so everything in the tasting room is through Square. All
Yeah, it's
right,
probably all pickup orders, is what I'm assuming. And they probably just
yeah,
use us for their shipments.
okay. Well,
That's
Square, Square also has excellent reports. So I would just do, I would do a month-end summary process for both Vino Shipper and for Square. And then you have the money, the deposits, that need to be, entered as well.
Mhm.
So so you'll need to, so Vino Shipper is used for the shipping and for the wine club, I'm assuming.
Probably, yeah.
Yeah, okay, so you probably have random deposits and sales through Venus Shipper and daily deposits and sales through Square. Yeah, so you're gonna have two different procedures. They're gonna run in parallel. It sounds like double the work, but frankly, once you get the routine going, these things, you can do these things very quickly and efficiently.
Do you have any recommendations for running payroll?
Um, well, I love QuickBooks Payroll for desktop. I don't love QuickBooks Payroll for QuickBooks Online. I personally use Gusto. Gusto integrates with QuickBooks Online.
That's what we use as
Yeah,
well.
so I would go with Gusto. Um, and Gusto can be tweaked. The key thing with your payroll is you need to identify your admin team from your winemaking team. That's a critical step in the payroll process. And Gusto, you can do that with Gusto when it's set up correctly.
And is there a reason for that? That you
Yeah, and
recommend?
that's because the winemaking, all of the payroll and payroll taxes for your winemaking team are part of the winemaking costs.
Ah, got it.
And
Right.
so what happens is all of the wages and payroll go into one bucket. And then at the end of the month, there's a memorized report that we set up, which will then help to identify how much of the wages and payroll taxes and medical were for admin versus winemaking. And then you do a simple journal entry to move that down to winemaking. And when we create a procedure, we've created this procedure for dozens of people and non-accounting professionals can very easily follow it. It's just pull up this report, take that number, plug it there, do a journal entry, and you're done.
Awesome. We use Stripe through Vino Shipper. Does Stripe integrate to QuickBooks, or would we just use our Vino Shipper reports? Vino Shipper reports.
Yeah, just the
I think
Vino shipper.
Stripe and QuickBooks, I don't think they.
Well, Stripe does have an integration with QuickBooks, but again, you have to look at the app that does it. So I have Stripe and I have to use, oh gosh, what's the name of that program? Uh, yeah, it's a semi-custom program that will take the Stripe transaction, massage it in the way that I need it massaged in order to bring it in. But my transactions aren't anywhere near as complicated as a winery. It's with a Z. No.
Oh,
Anyway, I wouldn't recommend that program for a winery because you have too many different SKUs, too many different products. So Stripe will go into Vino Shipper, then you take your Vino Shipper reports.
many thanks for your insights, Jeanette and Adrienne.
Well, I have a little sign off here. We have 2 more minutes.
Awesome.
So thank you everyone for attending. I appreciate the time that you took today to invest in the financial health of your winery. And just to let you know, if you're ready to take the next steps, I wanted to invite you to join the Fundamental 5 program. It's the only course designed specifically for small wineries to build a clean, reliable financial foundation. We have two versions. We have the do-it-yourself version, do it at your own pace. We also run cohorts a 6-week long cohorts to help hold your hand and move you through the 5 different systems so that you have a foundation that's set up to help you run the business easier. So if you want clarity in your numbers and confidence in your decisions, now's the time. Sign up for the Fundamental 5 or pop your name onto our newsletter, the bottom left of our website, and you can hear about the different courses that we have, including the Vino Shipper mini course that'll be coming up. So thanks again for joining me. We
Yeah,
look forward to
thank
staying
you,
in touch.
Jeanette. Thank you so much. We loved this. This was very helpful, and I'm sure people will find it, very useful for them. So,
Great. Well, thank you so much for inviting me.
yeah. All right, everyone. I
Thank-
hope you have a wonderful day. And yeah, thank you for attending.